The Fed pivot is finally here, and not in the way that you might suspect. The Fed, as well as the Treasury Secretary Janet Yellen and Fed Jerome Powell, I should point out, are making it so depositors will not lose money with SVB, as well as with the recently closed Signature Bank of New York. This is causing futures to go nutty. We got to get into exactly what is being said and how this could affect your money, your portfolios in the stock market. So let's get to it. Signature Bank was just shut down, citing systemic concerns, systemic problems, some of the same problems that SVB was also facing. And look what happened to them. Massive bank runs, total and complete failure. Now, the Fed is coming in to save the day, and we'll talk about that in just 1 second. A quick backstory here. Signature is one of the main banks to the cryptocurrency industry. As of December 31st, Signature had $110.4 billion in total assets and $88.6 billion in total deposits, according to the securities filing. Now, it says this is breaking news. Obviously, check back for updates. Very, very short, so we don't have the full story here, but it doesn't even matter because regulators unveil plan to assure depositors will get money after SVB collapse. Banking regulators devised a plan Sunday to shore up deposits at Silicon Valley Bank, a critical step in stemming a feared panic over the collapsed tech-focused institution. In an anxiously awaited announcement from the Federal Reserve, the central bank said it is creating a new bank term funding program aimed at safeguarding institutions impacted by the SVB failure. In addition, regulators said all depositors at both SVB and Signature Bank in New York, which also has been closed, will have full access to their deposits. This means $250,000 or $200 million. You're going to have access to your money. Let's continue on to see exactly how this is going to work. So, it says, a joint statement also said there would be no bailouts and no taxpayer costs associated with any of the new plans. Quote, today we are taking decisive actions to protect the U.S. economy by strengthening public confidence in our banking system, said a joint statement from Fed Chair Jerome Powell and Treasury Secretary Janet Yellen and FDIC Chair Martin Grudenberg. The Fed facility will offer loans of up to 1 year to banks, saving associations, credit unions, and other institutions. Those taking advantage of the facility will be asked to pledge high-quality collateral such as treasuries, agency debt, and mortgage-backed securities. So, let me break that down into English. There's essentially an unlimited line of revolving credit for these banks, institutions, right, credit unions. We just went over it. And they're going to be able to pull out as much money as they need, but they're going to have to put up some collateral in the meantime. Now, this facility is not going to be used really at all, right? Let's be honest here. You have the Fed backstop here. People are not going to take their money out of the banks anymore. The Fed just prevented a massive bank run on second and third tier banks. That's the simple fact here. Nobody is going to think these banks are going to... Dude, they can't go bankrupt. They can't go bust. I mean, you're going to get your money regardless, whether it's from the Fed and this lending facility, or whether it is from the banks themselves. The bank run has officially been canceled. Ladies and gentlemen, that's important to know. Fed Jerome Powell, Janet Yellen, save the freaking day. Now, we just read that. This paragraph right here, it says, quote, this action will bolster the capacity of the banking system to safeguard deposits and ensure the ongoing provision of money and credit to the economy, the Fed said in a statement. The Federal Reserve is prepared to address any liquidity pressures that may arise. And I don't know if this is a good thing or a bad thing, but it's like, finally, dude, you're gonna do something that makes some sense, right? Oh my gosh. Crazy. The Treasury Department is providing up to $25 billion from its Exchange Stabilization Fund as a backstop for the funding program. Boom. I mean, good to go. Good to go, dude. Along with the facility, the Fed said it will ease conditions at its discount window, which will use the same conditions as the BTFP. The news came after Treasury Secretary Janet Yellen said Sunday morning that there would be no SVB bailout, and this did cause more fear in the sector that maybe the regulators were just going to let this get worse and worse and worse. Think about it. That's what happened in 2008. It's a reasonable conclusion that they probably, those banks in 2008 should have went bankrupt, right? They were not, I mean, it's a very real question. Same thing with SVB. They should be the example, I guess you could say it. But if they would have stopped that, like the Fed and Janet Yellen are doing now, 2008 might have not been as bad, essentially, right? But they did not want to do that, and I think that's not what Fed Jerome Powell wants to do, is create a great recession again. I think Janet Yellen could care less, but I don't think Fed Jerome Powell wants to do that. Not going to leave a good name for his legacy. Now, quote, "We're not going to do that again, but we are concerned about depositors and are focused on trying to meet their needs," Yellen said on CBS Face the Nation. The SVB failure was the nation's largest collapse of a financial institution since Washington Mutual went under in 2008. The dramatic moves came just days after SVB, a key financing hub for tech companies, reported that it was struggling, triggering a run on the bank's deposits. Authorities had spent the weekend looking for a larger institution to buy SVB, but came up short. PNC was one interested buyer, but backed out, a source told CNBC's Sarah Eisen. The scenario harkened back to the September 15, 2008, of investment banking giant Lehman Brothers, which also found itself insolvent and in search of a buyer. The government also was unsuccessful in that case following a weekend of wrangling, triggering the worst of the crisis. Yeah, and essentially that's not what they want to have happen this time around. So it looks like Fed Jerome Powell, Janet Yellen, and the FDIC leader have essentially just save the banks, save the bank run. S&P futures, they've only been open for about 50 minutes now, up about 1.5%. Nasdaq up about 1.5% as well. Yeah, I mean, pretty good, I guess, if you were someone that was hoping the banks did not collapse, hoping that people did not lose their jobs and you go through a Great Depression. So I think it's ultimately a good thing what they're doing here. Breaking news as of right now as well, U.S. government steps in and says people with money deposited at SVB will be able to access their money. Again, like we just pointed out, the bank run is over. It's canceled. So that is going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Most importantly, enjoy the rest of your day, and I will see you in the next one.